Hi, David here, CEO and founder of the Freedom Founders Mastermind community. Let's talk about the difference between investment and speculation, or investor and speculator. A lot of people think that they're investors when they go out in the marketplace and they think they're investing their capital assets, their money, their capital, into what they believe are investments. This is not always the case. In fact, many times people who are investors or think they're investors actually are speculators. In markets that have a long uprise, a bull run market, we might call it. Well, we've seen that in the last 14 years, really coming out of the 2008 great financial crisis and then seeing a multitude of expansion in really all asset classes, whether it's the financial markets or products or tangible assets like businesses and real estate. We've seen everything go up for a lot of reasons. And as the market continues to climb and hit what we call exuberance or mania, which I believe we're in right now, people who are not investors continue to ride that train thinking you can pay anything for anything as long as it keeps going up. And it's what I call the greater fool theory. There's always going to be somebody else to buy that asset and pay you back a profit on your investment. Real investors focus on fundamentals. They focus on intrinsic value of the business or the asset in which they're willing to put their hard-earned money. Yes, there can be a back-end value-add profit if and when the investor decides to sell that asset, that stock, that real estate, that syndication, that rental property, whatever it is. There can definitely be a back-end profit, a growth component. But you've got to focus first on the fundamentals of what's the value, what's the intrinsic value that produces a cash flow dividend on some regular, predictable basis from generating profits out of that business or that other tangible asset, again, like real estate. If you're not investing in something that produces that and you're only looking for the growth aspect, that's going to be more speculation. A lot of people are going to get frustrated, I believe, and disillusioned in the next years, not just the next couple of years. I'm talking about probably over the next decade or so, because the dynamics in the monetary and fiscal policy of the Federal Reserve, of our Congress, the ability for them to essentially kick the can down the road and stimulate the economy beyond belief, like spending and inflating the dollar like we've never seen before, has been what's pushed and moved the markets like they have been. This can't continue. It won't continue. There's going to be a day of reckoning, or I'd say really not a day. There can be a day, a correction. I think the markets will correct heavily. Financial markets will correct very, very heavily because it's a very efficient market and things happen fast there. The tangible hard asset component of the markets will also correct. Different sectors will correct differently over a different period of time, but it takes longer, but they'll still correct. We've seen it in history before. It always happens. So my point to you is before you jump or stay in the markets that you're in right now, whatever it is you like, understand that you are probably investing at the height of the marketplace right now, and the asymmetric risk that you're taking at the height of the market should be enough for you to reconsider what you're doing. Take some chips off the table, go to higher ground, cash equivalents, treasury bills, or maybe look at being more of an investor in the credit markets if you know anything about that. In real estate, we're able to balance between equities and private credit. Private credit being like loaning money, like being a bank. Equities where we're always looking for the growth and the tax benefits and all the things that are wonderful about that aspect. And that's what most people focus on in life, is the growth aspect of the equity market. But the equity market goes through cycles, as does the credit markets. And when things are out of balance, as they are today, when all the writing's on the wall for the equity market to go through a downturn, a correction, and then probably be very, very negligible on growth over the next many years, it's time to look for a different model. And that's not easy to do when people are used to just following the crowd, jumping on board, kind of playing that greater fool theory game that really becomes speculation and not investment. So you've got to decide, are you an investor or are you a speculator? And to understand how to do that, you've really got to be focused on what can make you a better investor. The worst part, I believe, is abdicating your financial future to a third party, to a money manager, to a financial advisor. I'm not saying that you shouldn't take advice from other people, but you've got to drive your own train to freedom, because no one's going to look after your stuff, your life, your future like you will. Take it on like you did everything else in your life. If you abdicate it now, I think you'll suffer greatly and be very disappointed in years to come. That's my tip and really my rant for today: investment over speculation over abdication. It's your choice. Make the right one.